Hi, good evening. Welcome to SBL's Practice to Pass session for December 2020 attempt. This is day 4 and my name is Hassan Dosani. I hope you guys are keeping well and safe. And if you can hear me clearly, can you please type yes? Very good. Excellent. So let's wait for half a minute for more people to join in. Right, so let's begin. What's today's game plan? First of all, today we will discuss how to present your answer. So yesterday I was receiving a lot of questions that what should be the format of the answer, this and that. So today we will cover all the aspects relating to how you draft and how you present your answer. Okay. And today's topic includes risk management. It's a very important topic. Almost in every attempt this has been tested. Then we'll talk about internal controls and weaknesses. Again, a very important topic. Almost every attempt this has been tested. Between these two, the paper consists of 25 marks on an average. Yeah, so that's both these topics are very important. Then we'll talk about internal audit and audit committee. This has not yet been tested in SBL so far. So we will just spend a little bit of time on this. And lastly, if time permits, we will talk about funding strategies or financing structure. It's a small topic, but it has been tested once or twice. Right, as usual, before we proceed, please make sure that after the December webinar, which will finish tomorrow, please make sure that you watch September 2020 webinar, because there are lots of important topics which has been covered by me in the September webinar and which has not been included in December. So in order to make sure that you complete your preparation, you have to watch both December and then September. Okay. So those of you who have not yet joined my global SBL WhatsApp group, this is my personal WhatsApp number. Just drop me a message and after the class, I will add you guys to my WhatsApp group. So are you guys ready for today's exam technique on how to present your answer? Okay. The first thing, linking answer to exhibit is a must. This is a mandatory requirement. The examiner is crying about this in every attempt, that students, they give general answers, they don't link the answers, they don't write their answers in the context of the case. So no general answer or definition is required. How do you link with the exhibits? It's very simple. You just reproduce the facts and figures and some key sentences and some key problems from the exhibit. You just copy paste in your answer and then add your own little bit of thoughts on those. Okay, it's not a rocket science. If you remember yesterday's webinar, we did a small exhibit on big data, and I showed to you that the entire answer was hidden in the exhibit. All you needed to do was pick up from the exhibit and reproduce in your answer. Also today we will do a couple of questions in which you will be able to see how you can link your answer and how all the answers are hidden in the exhibit. Okay, so that's number one. Number 2 point is very important. We have to adopt a paragraph style of writing. Okay, many students, they ask me, sir, can we give bullets? No. Why? Simply because remember day one, I told you that it is a boardroom paper. Whenever a CFO presents something to the board, it is normally not in a bullet style. We present in a report style or in a paragraph styles. Okay, so one paragraph should contain 1 point only. I have been repeating this almost every day. One paragraph should 1 point. If you are mentioning 4 points in your answer, then I want to clearly see 4 small paragraphs. Okay, please do not squeeze multiple points in one big fat paragraph. Do you understand? I want many small paragraphs, many small paragraphs, each paragraph just talking about 1 point. The paragraph can be as small as 3 lines, no problem. Okay, what should be the ideal length of the paragraph? 4 to 6 lines. We have discussed this, right? So can anybody remind me? Can anybody remind me? 1 point, how many marks? Let's see whether you remember or not. 1 point, how many marks we allocate for 1 point? 1 point should be of how many marks? Come on, guys. Wait, I'm not getting your answers. Wait a second. Yes, now I'm getting. Very good. Oops, what's happening? Just a second, I'm trying to fix this question box. Yes, 1 point is 2 marks. Thank God, and thanks to you. You are absolutely correct this time around. 1 point is 2 marks. Always keep in mind that we follow this internal rule of 1 point is 2 marks. And for 1 point, how many lines we supposed to write? 4 to 6 lines. Minimum 4, maximum 6. Okay, very nice. So if it is a 10 marks question, I want to see 5 paragraphs of approximately 3 or 4 to 6 lines each. Right, so your answer would be 5, 20, approximately 30 to 40 lines in total. Do you understand? If I count the empty lines and the headings and small paragraphs and big paragraph, so for 10 marks your answer should be like 30 to 40 lines in total, including all the blank lines and headings and all those. I hope there is no confusion in this. Okay, and this one is very important. This one, This is not from the examiner, this is from me. Because I check a lot of mocks, so I can feel how the examiner feels when he sees a paper. Okay, I can put myself in his shoes, and really, as an examiner, as a checker, it is really difficult for me to check a paper which is very cramped, not presented nicely. So please, when you leave one line between each paragraph, your answer becomes visually very pleasing. Okay, it's not a rocket science. Your answer will become visually easy for the examiner to check. He can easily see small paragraphs. He will not be stressed out. He can see how many points you have covered. So please, you are not being charged on the number of pages you are using, right? So please try to leave one line between each paragraph. Okay, now for CBE students, they can also leave one line between each paragraph. Just you need to press one extra enter button and you will go to the next line. So do you understand this point number 2? This one is very important from a presentation point of view. This is how your answers will be presented. For example, let me show you that if this is your answer sheet, and it's a 10 marks question, you will give an opening sentence, and then for 10 marks I need 5 points, so one para, then you leave one line here, and then again one para, leave one line, one para, leave one line, and so on. You see, it's very simple. Small paragraphs with one line in between. Okay, try to use as many pages as you want, no problem, but please open up your answer so that it is visually easy for the examiner to go through your answers. Let me see any questions. Sir, in CBE notes, in CBE, what is the recommended style and size of fonts? Okay, you can watch my September webinar. The recommended style, the style would be exactly the same in CBE. Okay, no change in style. It will be paragraph form. Leave one line between each para. Small, many paras. Font size should be normal. I think it's 12. But for headings, if you want to look really professional, you can give larger font size. But you can watch my September for more details. Sir, briefing notes and briefing paper are the same, Sushmita. Please, I would like to remind all of you that your question should pertain to the slide under discussion. Okay, I will not be answering questions which do not pertain to the slide because it breaks the tempo. Hold your questions, these questions like these, and I will give 10 minutes in the end to take any kind of questions. Okay, right, let's move on. Point number 3, focus a lot on format required in the question. So most of the questions in SBL tells you specifically which format they want. It could be they can ask you for a report, they can ask you for a briefing note, they can ask you for a memo, they can ask you for an email, they can ask you for a presentation slide, they can ask you for a letter, anything, whatever format you have been asked to do. Please kindly, I beg you, please produce that format. Please use that format. The reason I'm begging you is, and you might be laughing, is because the examiner always says that students don't follow the format. I fail to understand which idiot students are there in the world who are not following the format. If the question says make a report. I am sure that all of you will make a report, right? How can people be so stupid of not making a report if the question says make a report? So please be very, very, careful about the format. Look for stress words. Now, what are stress words? Words like extremely, very, significantly, notably. These are called stress words, which, places extra weightage, extra emphasis on any particular fact. And try to use these sentences, these facts and figures in your answer, because if there's a stress word in this paragraph, then that means it is something important, right? The use of models is not mandatory. We have discussed this earlier. So if you feel that the model can get confusing, forget about it. Just give a logical, simple answer. And then this is another examiner's comment. When you are asked to give recommendation, then your recommendation should be supported by a justification. So first of all, you are not supposed to give recommendation or conclusion unless specifically required in the question. Am I clear? I'll repeat it. First of all, you are not supposed to give any conclusion or recommendation unless it is specifically or clearly mentioned in the question that please give your recommendation or please give your answer along with conclusion, right? So in case you are supposed to give your recommendation, then you need to then give your justification why you are recommending option B. There must be some logic, right? So if you're recommending option B, then you must give one reason to support your recommendation. Sometimes one requirement asks for two things. In that case, give two separate headings for each requirement. For example, this question, it says, assess the role and value of non-executive directors. So it looks like a very innocent question. Assess the role and value. Some students, they focus on the role and they forget talking about the value. Value means the advantages. Some students, they talk about the value or the advantages of having non-executive directors, but they forget to talk about the role. And then they will not even score 50% of the marks. So in this scenario, when the question says assess the role and value, I would rather prefer that you give a heading role and cover 2-3 roles, and then you give a heading value, and then you write 2-3 advantages. In this way, number one, you will not forget. You will make sure that you have answered both the requirements, role as well as value. And it also will clearly tell the examiner that you are presenting in a complete, you have answered in a complete manner and you are presenting in a logical manner. Okay. Another example, draft a memo which discusses the ethical and reputational concerns. So apparently it looks like a simple question, ethical and reputational concerns. But ideally you should give two headings. Some of the points you cover under ethical concerns, some of the point you cover under reputational concerns. Okay, just give two headings like this. In a rare situation where you feel that you are not able to bifurcate, where you feel that although you know that you're supposed to give two headings, but the information available is in such a manner that you are unable to bifurcate, then in that case, okay, then try to give a continuous answer. But in an ideal situation, if you can see that there are two stuff required, then try to give two separate headings. Okay, this is part of your smart planning. Now, just a second, I rub this first. Now, this one is very important. If a question asks you to identify weakness and give and recommend improvements, and believe me, this question comes in all the attempts. Identify weakness and recommend improvements. Or another possibility, identify key risks and recommend mitigation factors. When you get these two type of questions, always use a tabular format. And I will show you in a little bit. Okay, in this kind of a question, always use a tabular format. It's very simple. You make a table, on your thing, on your manual paper. You will divide this, you will do like this, you will say weakness, and you will say recommendation. That's it. And if it is risks, instead of risks, weaknesses, you write risks. But try to give a tabular format, okay? Then your answer will be inside the table. One weakness, and then its recommendation is in front of it. Leave one or two lines, then another weakness, and its recommendation in front of it, like this. Okay? Right. Do I have any questions? Come again, number 6. Okay, I'll see what number 6 is. Sir, in report format, don't we have to give conclusion anyway? No, please. This is what I am saying. If the question does not ask you for a conclusion, avoid giving conclusion. Okay, even if it's a report format, avoid giving conclusion. Why? Because you guys are not really experienced enough. You have explained the answer, and in the end, you are trying to wrap it up or summarize in your own words in conclusion. It's a waste of time. You are just repeating stuff. Okay, so avoid conclusion unless specifically required or mentioned. Okay, so should we plan out the format during the first hour of planning, or do you suggest that we start during the write-up? What format planning are you talking about, Jawad? Each question has its own format. So when you start a question, you plan the format at that time. Okay. If the question asks for formats, can we still use tabular format? Yes. Yes, you can use a tabular format in a report. Why not? So if the question says, may prepare a report to identify weaknesses and recommend improvements. So you make a report format to from subject, date, introduction, and then you just make a table inside the report. It's acceptable. Okay, good question. Whether I'll just bring screen point number 6 in a bit. Don't worry. Sir, tell something about pens. Excuse me. Shavas, please don't repeat your questions. You are flooding my question box, okay? So please ask once and that's it. And please don't ask questions not pertaining to the slide. Ask this question towards the end. Sir, in draft memo, can we use both ethical and reputational concern in subject of memo? Yes, you can, and I will show to it tomorrow. I will actually show a lot of things to you. Okay, tomorrow we'll talk about formats. Guys, can you just give me 10 seconds? Right. So, okay. Now let's move. Point number 6 people wanted to see. Is this, where is point number 6? Is this the, uh, was it slide number 6 or point number 6? I'm not sure. All right. Now, these are the topics: project management, project initiation document, drafting section of a report format, internal control system, internal control weakness, commercial acumen skill, communication skills. These topics were covered in September webinar of day 4. So please watch September webinar for especially project management, because I'm not covering these topics in December. I am covering internal control weaknesses tonight, okay, because it's an important topic, but I will be solving a different question. The question which was solved in September webinar was different, so I have selected a different question so that you have more variety. Right, now we will start with tonight's thing. Just let me go through one final question. Sir, will we always be going to use tabular form in weakness? Yes, Baba. Why do you need to, I repeated it so many times, you have to use a tabular format. So why do you ask we have to always use? Whitney, I will ask this question in the end. Right, so let's start with today's topic. So risk management, again, this topic was covered, I believe, in September as well. But because this topic is asked in almost every attempt, I thought I will cover it in December as well. But I have chosen a different question so that we have a variety of resources available. So risk management, very simple topic. So first of all, I'll just hide it. First of all, tell me, what is the meaning of risk? Just guess. Risk. Risk is something good or something bad? Think about it. Yes, risk is something which may cause you harm or damage in future. So it is a future event, a future adverse event which can cause damage to you, correct? So risk is supposed to be bad because it can harm you. Now, risk management, think about it. What does it mean? Risk management. Risk management means how we manage our risks, how we try to avoid or mitigate the chances of those risks happening and causing harm to us. So risk managements are all those steps and precautions and controls which an organization it puts in place to minimize the chances or the impact of any risk. Okay, so that's a very high level thing. Now, in the exam, one of the most favorite question of the examiner is, he wants you to identify the key risks. I repeat, one of the most favorite question of the examiner is, he wants you to identify the key risks which the company is facing. So obviously, whatever case study is being provided to you, you need to go through the exhibits and you need to identify what key risks is that particular company facing. So in order to identify the key risk, you must know what are the types of risks out there. Okay, so there's a very long list of types of risk, but I have selected like the top 10 or 12 risks which are most common, and you will find these in any case study. So first of all, the first and foremost risk is called business risk or strategic risk. Okay. Now, you should be able to guess from the name. Business risk, what does it mean? Read in reverse. Business risk is a risk which can cause damage to the entire business. So this is a very serious kind of a risk because it can wipe out our entire business. It can threaten our going concern. For example, COVID-19. Now, who would have thought COVID-19? It was a significant business risk. Many small, medium, and even large businesses, they went bankrupt and they went into administration. All these hotels, these all this rent-a-cars, Hertz rent-a-car, big brands, they all went into losses. Okay, why? Because of this business risk. Strategic risk is the same thing, that strategic risk means that your strategies, they go wrong. You make a wrong decision and it suddenly falls flat on your face, and strategic risk will definitely lead to a business risk. Correct. Financial risk. Financial risk means continuous losses. So your P&L is going down, you are making continuous losses. And obviously losses means cash flow crisis. You will start depleting your cash reserves when you're making losses. So financial risk is continuous losses, bad working capital management, cash flow crisis, and eventually, if you don't control financial risk, if you are into continuous losses year on year, eventually financial risk will convert into a business risk, because then if your going concern is threatened, it becomes a business risk. Okay, so financial risk means losses and cash flow issues and liquidity management, all those things. Liquidity risk means you don't have sufficient current assets to pay off your current liabilities. Okay. Credit risk means that your customers, you have given credit to them, and your customers will not or may not pay you their dues, and it will eventually lead to a financial risk because you're not collecting money. It will lead to cash flow crisis, right? Even in COVID, uh, credit risk leads to liquidity risks, and liquidity risk will lead to financial risk. These are all linked together. So because of COVID, a lot of the credit risk really went up because my customers, they were out of business, so they stopped paying us, and because they stopped paying us, my current assets started going down because I was not collecting money. And then eventually, once my reserves, my bank surpluses, when they go start depleting, I enter into the financial risk. Very interesting, eh? Any questions so far? Liquidity risk, liability, it's very simple. Current assets is less than current liabilities. Okay, Shaji Singh, insolvency. Insolvency is financial risk, yeah, or business risk. Airline, yes, Sardar. Airline really struggled in COVID, right? It was a big business risk. Many small, low-cost airlines, they shut down. Right, foreign exchange risk. This one is very interesting from an exam point of view. So foreign exchange risk simply means that when you deal with international customers, when your customers are in another country, So your receivables are in another currency, or you have suppliers who are in some low cost countries. You are importing stuff from outside. So either if you are exporting or you are importing from outside or exporting to outside, you are exposed to foreign exchange risk. Most likely a company which is based in Europe, most likely it will be purchasing stuff from low cost countries, or it might have manufacturing facilities in low cost country. It might have outsourced production to low cost countries like China, India, Bangladesh, right? Because Europe is a high cost economy. So if you are sourcing your products, your raw materials from a low cost country, you are exposed to foreign currency risks. Okay. How do you deal with foreign exchange risk? Can anybody let me know? How do you deal with foreign currency risks? Let me see your IQ. Hedging, excellent. I'm very impressed. Hedging forward contracts. Very good. So please, if you mention these words in the answer, because the question will ask you for solution as well. So you can say company can do hedging, or it can take forward covers from banks. Credit risk, how you manage credit risk? Strong credit control procedures. Okay, so in my company we apply strong credit control procedures. We do not give credit to every one of you. We analyze the customer, we look at their financials, we decide whether how much credit we need to give. If the guy doesn't pay, we stop there and we don't supply him further stuff. Liquidity risk with me, how can we control liquidity risk? Better working capital management, right? Financial risk, which means continuous losses, so better business strategies. Right, what is intellectual risk? Intellectual risk is when you are heavily into research and development, when you are into innovation, when you have very skilled employees, who your research scientists and all those things. That's the risk, that your secrets, your patents, your formula is leaked out. Okay. Political risk means that it means the government instability. Political situation is unstable. The government is unstable. They are changing the laws. The law and order situation is not good. So political risk. Legal and compliance risk. This is more applicable for regulated industries like banks and healthcare, hospitals, oil and gas, where they have a lot of law to follow. So legal and compliance risk means that you do a non-compliance and you miss following a law. Environmental risk is more about ecological risks, this pollution and emission. So again, this is more into applicable for manufacturing entities, oil and gas entities, where you are doing some oil extraction and there is some damage to the environment of earth. Health and safety risks means your chances of accidents, injuries, deaths to your employees, to your customers, to the society. Again, this is more applicable on manufacturing entities. Technology risk, very important. So nowadays, all companies, they use technology like IT and online and website and servers and softwares and data and apps, internet. This is all technology. We are heavily dependent on technology. What happens if internet goes down? Can you even imagine if internet is out for 24 hours? So right now you guys are attending this live webinar through internet. Supposing my internet goes out, it goes bust. Everything, it's a risk, right? It's a possibility. So technology risk means if you are using technology, It can be IT technology, it can be plant and machinery, robotics, any kind of technology. And if something goes wrong with that, so you need to have plan A, plan B, plan C. Okay. So cut the long story short, examiner's favorite question is identify the key risks which this particular company faces. So I've given you the list of all possible risks, and when you read a scenario, you must be able to identify the risk. Okay. For example, if the scenario says that the company procures raw material from low cost companies in other parts of the world, which risk will this mean? Come on, guys. Enough of talking. Now you tell me. If the question says that the company procures raw material from low cost companies in other parts of the world, which risk? First of all, very, very simple, foreign currency risk, right? Foreign exchange risk is there, but there could also be another risk. It is called supplier risk. A supplier risk means that your suppliers, they go bust. I mean, you're not able to purchase raw material from the supplier. So for example, if a tsunami comes in that particular low cost country. For example, I'm buying stuff from Sri Lanka, and you remember like few years back there was a big tsunami in Sri Lanka. All the suppliers, they will stop working and I will face a big risk. So anything which can cause damage is a risk. You just put a name to it. It's not a rocket science. Okay. What else? Supposing the company doesn't have money to pay dividends. If I pay dividends, it will finish my cash reserves. I repeat, the company doesn't have funds to pay off its dividend. And if I pay dividend, my funds will finish. Which risk? Liquidity risk. I'm very impressed, guys. Very impressed with you. Working capital risk. In working capital risk, let's be more specific. Liquidity risk. Because dividend payable is your current liability and cash is your current assets. You don't have sufficient current assets to pay your current liability. This risk is called liquidity risks. Very good. There is one more risk I forgot to mention. Any idea about market risk? Any idea about market risk? This is something to do with your share prices. That's a hint. Market risk. Oh, very good, Sharik. Competitor? No, Seven. Okay. Seven, you are right in the literal sense, but when we say market risk, it's normally to do with capital markets like, the share prices. No, loss of reputation. Loss of reputation, Chavez, it is called reputational risk. Okay, loss of reputation is reputational risk. Market risk, when your share prices and the share prices of the company, they fluctuate in a adverse thing, it's called market risk. Okay. Is it clear? Market risk means when the share prices of my company, they start going down, which is not good. So my market capitalization, it goes down. Yes. Good one, Ritika. I like it. Market capitalization. So it's just a risk. So identify key risks. I told you there are like more than 100 risks, but I just gave you selected risks. So add market risk as well. So if the case says that the share prices of the company is going down, we will say it's market risk. Okay. Okay. Supplier risk, market risk. Someone mentioned reputational risk. So anything which can cause bad reputation, it's called reputational risk. Someone said competitive risks. So, if we are losing market share, we can call it competition risk, or we can call it business risk because we are losing market share, right? So there is no hard and fast terminology. It's just very common sense which you need to use. Okay. Product risk. Okay, product risk is there. Yeah, can anybody guess what is the meaning of product risk? Product risk means that your product might not be successful or it's nearing maturity. Someone mentioned operational risk. Very good. Anyone can guess operational risk? Means that your operations, like your production processes or day-to-day operations, it's not efficient. Very good. You see, now you understand. Very nice. Let's move on, guys. I'm satisfied with your performance. Now, when we identify the risks, then we have to give recommendations. When we identify the risks, the examiner also wants us to give mitigation strategies. For example, if we face foreign exchange risk, what do we do? If we face foreign exchange risk, we take hedging. So that's a recommendation. If we face business risk, what do we do? Business risk means that we are making continuous losses. Then we have to change our business strategies very quickly so that we become profitable, right? If there's a health and safety risk, we need to implement stronger controls and safety procedures and give training to staff so that the chances of accidents and injuries are minimized. So giving recommendation involves some little bit of common sense. Okay, it's not difficult. Do not panic when we have to give recommendation. If I tell you a problem, you will be able to give me a solution, right? If I say I am fat, you will say, okay, no problem. You control your food, you walk, you do some exercise. If I say I want to pass SBL, you will say, okay, you do this. So it's very simple. It's very common sense, right? So you will need to be able to give some simple, common sense recommendation. Now, another possibility is the examiner may ask why risk varies. So let me hide it. Okay? Let me ask you one question. Do all company they face the same level of risk, or does risk varies from company to company? I want your answer. Varies or same? Do all company in the world they face the same level of risk, or does it vary from company to company? It varies, right? It varies from company to company. Why? What are the reasons? It depends on the size of the company. It depends on the geographical location or the region of the company. It may depend on the growth phase of the company. For example, it's a setup company or a growing company, it's a startup, it's a mature company. It depends on the business model of the company, like it's physical or online or both. It depends on the financing structure of the company. So these are some basic reasons. Now, similarly, if I ask, do all industry face the same risk, or risk level varies according to industry to industry? Tell me. Again, yeah, industry risk also varies from industry to industry. Why? Because it depends on the nature of the product. A financial industry will have different kind of risk. A bank faces different kind of risk versus a manufacturing company. It depends on the level of industry. Some industries are capital intensive, some industries are cheaper, smaller industries. It depends on the regulations. Some industries, they are highly regulated. Some industries are less regulated. It depends on the ecological aspect, like oil and gas and manufacturing, they are exposed to more ecological environmental risks, okay, as compared to a bank. It depends on the level of technology. For example, high-tech companies, they face high level of technology risk as compared to non-high tech companies, right? So you understand why risk varies from company to company. You need to know 3-4 points or reasons, and why risk varies from industry to industry. You need to know 3-4 reasons. Very good. Now, risk diversification, very important. One of the basic technique of minimizing risks, it's called risk diversification. You know, you must have heard this sentence, don't put all eggs in one basket, right? Your grandmother, your parents, or even in these old films, don't put all eggs in one basket. Why? Because if that bloody basket falls, all the eggs will go. So then what do? Don't put all eggs in one basket. Then you split. Then you put your eggs in multiple basket. Few here, few there, few there. So that if one basket falls, at least you have some eggs saved. So that's called diversification. So the main basic philosophy of risk management is that you should diversify. So the first level of diversification is product diversification. So if I'm selling one product, maybe sooner or later I should add more products so that I'm not dependent on one product. Okay, if I'm teaching ACCA only, or if I'm teaching SBL only, I should add more subjects because tomorrow I don't know about SBL. Or if I'm teaching ACCA only, I should start teaching CIMA or CA as well, because if ACCA starts going down, I do have other options. So product, I must have product, more products, more than one product. Once you have more products, then you can think of a bigger diversification. You might think of industry diversification. So what happens if the teaching industry goes down? So then I must have spread my eggs in, and I should start some school or Montessori or university, or I should have Uber cars. I don't know. So that's called industry diversification. And then another possibility is geographical diversification. Don't put all eggs in one country. Because if the political situation of that country deteriorates, if there's a natural calamity, if the economy goes down, like Syria, okay, things are really bad in Syria. So if all my business was invested in Syria, I would have been screwed by now. So how do you deal with geographical diversification? You slowly and gradually set up businesses in other parts of the world so that you spread your eggs in multiple baskets. Okay. Risk mitigation strategies, it's a theoretical thing. I don't expect this kind of a question, but this question might be possible. Embed risk in organization's culture. So the first step of risk management is that we need to bring the concept of risk management into the organization's culture. Okay. Risk management is not a function, it is a mindset. I repeat, risk management is not a department or a function, it is a mindset. I expect that all my employees, regardless of which department they work, I want them to adopt a risk-averse mindset. Okay, so how do you create this culture of risk management or this mindset or awareness of risk management across the organization. So the topic is called embed in the culture. This is the key word. So in the exam, you might see the word, how do you embed risk management or risk awareness? So when you see this word embed, you need to produce this list. Okay, so the first thing is, when we want to create a culture of risk management, there has to be a commitment from top management. The board, the governance should be strongly committed towards risk management, because anything to do with culture needs to come from the top. And then if the board is committed, then there should be a formal risk committee. You remember the board, there are various committees. So if the board is serious about risk management, then they should have a formal risk committee. Then they should adopt the company should adopt risk management frameworks. So just like accounting frameworks, there are risk management frameworks in the world. So so we should implement proper risk management frameworks. And lastly, but most important, employee training. Because we need to change the mindset, we need to give awareness to all the employees. Employee training is a very important thing to embed risk in our culture. So for new employees, when they join, we should give them orientation and tell them about the importance of risk management. And then for all the employees, we should include risk management in their job description. Risk management should be part of their day-to-day job. And then we should, analyze their performance and appreciate and reward good behaviors. So the topic was embed. How can we embed risk management in the organization's culture? Last thing, what can be the advantage of risk committee? This was properly covered in September, but just 60 seconds I would spend on this. If the board has a separate committee, a risk committee, what could be the advantage of having a separate dedicated risk committee? Of course, that committee will be more focused and more specialized. They can spend more time, because the board, they want to focus more on strategic matters, right? They have limited time. So these committees, they are more focused, they have more time which they can spend. Higher involvement of NEDs, because the risk committee consists of majority of NEDs, and it increases shareholders confidence because there's a separate committee, so the confidence of shareholders is increased. We already discussed this, that whenever you get a question on risk management, like identify the risk, you give this table format. And for this, you remember how many marks? We assume 3 marks. Whenever I remember, for a normal point, we assume it is worth 2 marks. 1 point is worth 2 marks for a normal point. But recall that whenever we are asked to identify a risk and give recommendation as well, then we will base our calculation on 3 marks. Okay, we will say 1 point is equal to, one risk is equal to 3 marks, because we have to give extra recommendation as well. Okay, let me check question box before we move to a question. Ronit is having some volume problems. Oh, Ronit, sorry for you, man. If there is any question in exam for risk management in pandemic situation, how to deal with that? Ikra, very good question, Ikra. I'm really impressed. So Ikra is asking if there is a question in the exam for risk management in pandemic situations, how to deal with that? You guys tell me, how did the businesses survive? When pandemic comes, there's a complete physical lockdown, right? There's a physical lockdown. So all businesses whose business model was fully physical, they were screwed, they were bulldozed, right? So now you tell me, yes, one of the ways that if there's a physical lockdown, which means that your customers, no, when there's a physical lockdown, your employees cannot come, your suppliers are affected, your customers are affected. So make sure that all these three stakeholders, your customers, your suppliers, your employees, you have an online setup so that if there is a physical lockout, you know your online setup can cover it up to some extent. Secondly, someone said diversification, product diversification, industry diversification. So if you are into an industry which is highly physical, highly dependent on tourists like hotels and this and that, so we have learned our lessons that then you diversify industry. For example, the prices of Zoom software went up. Online gaming companies, their prices went up. Amazon's prices went up. So there were industries who actually benefited from the pandemic. So another risk management would be to diversify slightly, slowly. Netflix went up, yes. Zoom is free, but the commercial version is paid. So right now the webinar which we are using, go to webinar, this is a paid version. Free version only allows like 4 or 5 people to join. Okay, so diversify, very good. How to manage manufacturing? There you will get stuck. If you are purely into a manufacturing thing, you will get stuck. Right. Good one, guys. I enjoyed. Wait a second. Now, are we ready for a question? Let's do question and then we'll take a break. So this question is it's a SBL paper, March, June 2019. It's called Smartware, question number 1B. Okay, so let me go to 1B. So this is your paper, SBL, March, June 2019, sample questions. We need to look for question number 1B. So the introduction is there. Remember the format, then the requirements here. Question 1B. Assess the major risks presented by Smartware's current business model. It simply means identify the major risks, okay? And suggest appropriate mitigating factors to manage these risks. 10 marks. Plus there is 4 marks are available for evaluation skills by assessing the identified risks at Smartware objectively. That we need to assess the risk. So we need to identify, and assess means we should try to give impact. Okay, they will give us evaluation skills marks if we assess the identified risk. And assess means, we need to talk about if this risk happens, how it's gonna impact us. It's called risk assessment, right? So total marks is 14 marks. First question, how many risks I need to mention? Let me see your answers. Very nice, very nice, excellent. You guys are absolutely on the right track. 4 to 5 risks. Minimum 4, maximum 5. We will identify the risks. We will explain the risk. We will try and give the impact of the risk, and then we will give some mitigating actions. Okay, right. So I've already identified the exhibits because we don't have the time to read all the 6 exhibits. So always remember, the answers are hidden not only in the exhibits but in the background introduction as well. You see, so the first page is the background or the introduction of the company, right? Every paper I have seen, there is some relevant or very important piece of information which sits in the background or the introduction page. So those of you who think that only exhibits contains the answers, no. You also need to identify and read the background or the introduction page as well very carefully, so that there some of the questions you need to pick up information from here. Now please, let's see if you're I will read and let's see if you are able to identify the risk. The country is also experiencing political uncertainty because of its coalition government, who many influential commentators believe will not last for its full term. Did you see anything? Which risk? Which risk, guys? Come on. I saw the word political uncertainty, which this will lead to political risk. Very good. So I will just make a small table. You remember? The format, I would make a table, and I'm making a freehand table right now. Okay, so here it will be risks, and here it will be, what's the word? Mitigation actions, I think, right? I like using the word used in the question by the examiner. Number 1, what's the first thing? Give a nice heading. And now you write your story. You first copy paste this sentence from the scenario. You will say, what's the name of the country? Noria. You will say that Noria is experiencing political uncertainty, and there's a chance that the current government might not be able to complete its full term. What can be the impact of this? What can be the impact of this? So impact, I would like to mention in another paragraph so that the examiner can see. I will say that this may lead to possible uncertainty in future and changes in laws and taxes and the business environment. Khalas, whatever you think, just write a simple logical thing. Okay. Now, what do you suggest? How can this company Noria mitigate the political risk? Think. How can they mitigate the political risk? Invest in another country? Yes, Salman, absolutely. Diversification, please be more specific. Product diversification, industry diversification, or country diversification? Yes, geographical diversification. Very nice, very nice, very nice. Done, done, khalas. You guys are pass. Now, the case already says, because you have not read the case already says that, if you read here, the company also operates in two other countries on the European continent, Southland and Central. So you can use this. You can say the way smartware can diversify, mitigate this risk is by operating in other countries. We already operate in Southland and Centrum. We may consider more countries in future. So just by giving the name Southland and Centrum, you guys have linked with the case. That's it, boys and girls. This is what linking is. You just pick up the facts and figures from the case. Nice, huh? Easy. Halas, it's done. So this all things is worth 3 marks. Oh, sorry. Now, second risk. How many risks we supposed to go? Minimum 4, maximum 5, right? Oh, we're done with 1. Okay. Now read this one. Smartware has enjoyed long-term business success mainly due to the fact that it has carefully positioned itself towards the lower end of clothing retail sector. Now read. It sources its products directly from suppliers in low-cost economies. Now, what do you think? They have suppliers in low-cost economies. I can immediately think of 2 risks. One is, I love you. And the second risk is, I love you too. Think about the 2 risks. Very nice. Supplier risk. Very good. You're dependent on overseas suppliers. And what else? The second possibility is foreign exchange, foreign currency risk. Supplier risk is there and foreign currency risk is there. Very nice. I would focus more on foreign currency risk. Why? Because if I talk about supplier risk, what will I recommend? Shall I tell them to move to expensive country suppliers? That's against my business model, right? I'm buying from overseas suppliers because they are from low cost economies. So, I will just avoid it. It's not wrong. I can cook up something, but from exam point of view, forget about quality risk, Amjad bhai. Why you are complicating stuff? Stick to the list of risks we talk about. Quality risk is there, but don't talk about this in the exam. Okay, you'll get stuck in your own trap. Talk about foreign currency risk. Okay. So I would now say risk number 2. I would say a name. It's, what do I call it? Foreign currency risk. And then I will explain. First of all, I will copy paste from here. I would just say Noria, purchases or procures its products from various suppliers who are located in low-cost countries around the world. I just, instead of copy pasting, I just picked up the keywords and made my own story. Now, what's wrong in that? So we'll say that this means that Noria is exposed to foreign currencies as it has to pay the suppliers who are located in other countries. Any adverse movement between the foreign currency exchanges can affect Noria's costs and prices. That's it. Now, what do you suggest? We suggest that Noria, in order to mitigate this risk, Noria can consider either consider hedging techniques, or it may take forward contracts or forward covers from various banks. Again, you get nice 3 marks done. Easy, huh? I swear I'm not making this easy. It is actually like this. Everything is there. As long as you know what requirement is there, when you are reading the case, you can immediately identify. All the answers are given. So now let's move on. There's another. So you see only in the introduction or the background page, I saw 2 risks. They deliberately, these examiners, they deliberately hide stuff in the background. Who would think that background would contain some important information? So please read the background very carefully, because it contains a lot of information. Now, there's another specific thing. Now, read this. Thank you, Mr. Chairman. It is true that our current financial statements do not present the company in a strong position. It means that their financial position is going down. It doesn't look like a strong company. Financials going down. Which risk? Financial position weakening down. Okay, let's read more. However, it is not all bad news. The profit levels have fallen. Profit levels have fallen primarily because revenue has dropped significantly. Oh my God. So significant drop in revenue, significant fall in profit, position is bad. However, we have managed to forget about it. What do you think? Which risk is there? Financial risk. I would stay away from business risk for the time being. I would not say it's a business risk, because right now is the first year, right? It doesn't say going concern or administration or survival or something like that. It's more about financial risk. Mohammad Sajid is saying liquidity risk. I will break your head, Sajid. How liquidity risk talks about current assets paying current liabilities. Now this one talks about weak financial position. Either you did not understand, or you were absent, or you missed the lecture, right? My God. And then you expect the examiner to pass you. It's clearly financial risk, because financial risk talks about falling revenues. Financial risk talks about weak P&L. Financial risk talks about weak financial position. So this one is clearly a financial risk. Okay, you will copy paste from here that profit is going down, revenue is going down, and if this what's the impact of it? If this continues, it will impact the business going concern and cash flow positions. How can you mitigate this risk? You need to increase revenue and control your overheads. You see these words: significant infrastructure and overheads. So this is how you can fix this. You need to increase your revenue. Simultaneously, you need to reduce or control your costs and significant overheads. Got it? Now look at this one now. Let's read this one. They have seen a significant fall in share price value. So they are the investors, they are the shareholders, the institutional investors of this company. So they have seen a significant fall in share price value and are concerned about whether there would be any proposed dividend. So anything significant, again a stress word. Remember this stress word. Where is it? So which risk? Significant reduction in share prices is? It's called market risk. Okay. And what happens if if there's a significant fall in share prices? What's the impact? The share prices of the company will go down, which means that the market value and market capitalization of the company will go down. It will face difficulty in raising finances. How can you fix this? The only way to fix this is that the share prices should go up. And how can share prices go up? Is that the company shows some good profit, right? So it all goes down to good strategies, getting more revenues and costs. Let me take some questions. Yes, market risk, good strategies. Yes, good strategies. Increase EPS. How can you increase EPS? By profits, right? So be specific. The board doesn't understand the meaning of increased EPS. The board is non-financial, right? Right. The one more thing. This one. With the current state of company finances, it would be negligent of me as a finance director to recommend a dividend this year and deplete our cash reserves further. So they, if they give dividend, their cash reserves might deplete further. So this is a liquidity risk, okay, that they don't have sufficient cash reserves. So this we can say liquidity risk. And this one, last one, and very interesting. The institutional investors further suggested to me that the strategic direction of the company is completely wrong. What does it mean? The institutional investors, they think that the strategic direction of the company is completely wrong, and Smartware has out of touch with its core customers. So strategic direction is wrong. Strategic word is there. Which risk? Strategic word is there. Very good, very smart. You will see these keywords. If you know, it's I would say it's a strategic risk. What is a strategic risk? A strategic risk is a risk where your strategic direction is wrong, your strategies are going wrong, and you need to rethink over your risks or strategies, right? So strategic risk. So very good. So see how many points we came up with. Strategic. So one, strategic risk, liquidity risk, market risk, financial risk, political risk, foreign exchange risk. 6. We just need minimum 4, maximum 5. If we do it nicely, then I'm happy with 4. If you have done it nicely, explain everything properly with impacts and all this thing, then 4 is also enough. Otherwise, if you have done it quickly and shortly, then 5 points. Done, guys. You guys are expert in risk management now. Yes, of course, more than you. I need a break, my friend. Ali, Allah, your question, sir. My question of economic risk. Economic risk is a risk, yeah. But did you see economic risk on my list? So yes, the country is not doing good in economic terms. So economic risk is also there, and you need to just explain that the economic risk is there, and if the economy doesn't do well, we will lose customers and profits. And what's the solution? So Ali, you are right. So there's as long as your answer makes logical sense, it is a risk is there. If the economy is not working, the risk is there, right? How you deal with strategic risk, Abdul Wahab? Okay. Guys, please answer Abdul Wahab. He is asking how you deal with strategic risks. You change your strategies, you revise your strategies, you fix your strategies. That's it. It's very simple. No? If you're doing something wrong, you fix it. That's the how you deal with it. If I'm fat, how do I deal with it? It's very nice, very good, very good. It's SBL is very simple. You guys, I don't know who brainwashed you guys and told you that it's a very complicated thing. It's as simple as a basic thing. Right, guys. So here we will take a break. Okay, and after that we will. It's like almost 9 p.m. here, so it's 10 p.m. in Pakistan. I will see you in 15 minutes. Okay. All right, guys. Right. Welcome back from the break. Can you please confirm that you can hear me? Thank you, Rafa. Okay, excellent. So let's move on. So right now, before the break, we did the topic of risk management in a lot of detail. Okay. So we all know that every organization, they face risks. Okay. So when a company, when they face risks, then what do? They implement controls. They put in place they put controls in place in order to mitigate those risks, right? So the next topic is internal controls. So it's very simple. Internal controls system comprises of the whole network of systems established in an organization to provide reasonable assurance that the organizational objectives will be achieved and the assets will be safeguarded. Now that's a theoretical definition. I really don't expect something like this in the paper. But what is the purpose of internal control? What is the importance of internal control? What are the advantages? You must remember this list. It helps if you know it helps in achieving the goals and objective, orderly and effective conduct of business. It mitigates the risks, safeguarding of assets, a completeness and accuracy of accounting records, financial timely reportings, prevention of frauds, compliance with laws. All these are very basic things. And how do basic things companies they manage? They use internal controls to achieve all these things. Okay. Now, but what is the kind of questions normally asked in SBL? Again, the same type, that you will be asked to identify some weaknesses and then give recommendation. Again, this is the favorite question of the examiner, that he wants you to identify the weaknesses and then come up with solutions. Again, we will use the tabular format and we will assume 3 marks for one weakness. Exactly the same concept as we did for risk management. Okay. So we will be doing the same question, SBL March June 2019, called Smartware, but this time we will do question number 3. Here, draft a memo to the buying and merchandising director, which evaluates the effectiveness of internal control system at the company, particularly on the procurement side, and recommend control improvements to rectify the identified areas of concern. 12 marks. And professional skills marks are available for commercial acumen skills when recommending solutions to those issues highlighted in the internal audit report. What does it mean? Commercial acumen simply means that you give business related solutions. You don't think like an accountant. So when you see a weakness in a procurement department, you will give a logical solution which makes commercial sense and business sense. Okay, you can't have financial controls in a procurement department, right? So you will remove your hat of an accountant and you will think like an auditor or a business person. That's it. Nothing much needs to be done for commercial acumen, and I will explain commercial acumen in more detail tomorrow. Okay, so again 4 marks. So how many weaknesses? 12 marks plus 4 marks is equal to 16 marks. I will divide by 3, 5, maximum 6, but I would like to stick with 5. 5 to 6 points or 5 to 6 weaknesses. And we will be using a tabular format. So the question says draft a memo. So we will first prepare a memo format, and then inside the memo format, I will make a table. Okay. So you remember this is the same question we did few minutes back, that it is a company which buys its products from low cost countries. So let's let's read this. The executive summary of an internal audit report of Smartware supply chain has been given to you by the chair of the audit committee. There was some internal audit report on the supply chain. Supply chain means the procurement, the production, and all those things are collectively known as supply chain. The report identified a number of significant issues. Stress word. Oh my God. The report includes a number of significant issues. On behalf of the board, the chair of the audit committee has asked you to provide the buying and merchandising director with an objective appraisal of the. Okay. So let's look at the audit report. So that audit report is Exhibit 5. Yeah. So Exhibit 5 is the executive summary of the Smartware internal audit report on supply chain management. This is an audit report which has been given to you, and you are supposed to identify weaknesses or issues and then give proper recommendation. Right? Are you guys ready? Okay. Introduction. This report analyzes the effectiveness of the supply arrangements between Smartware and its core suppliers, all of whom are based in countries in Southeast Asia. Aha. So we knew already that we buy our products from overseas countries, but now they are specifically saying that our core suppliers, all of whom are based in Southeast Asia. The report itself was requested by the audit committee when information about alleged poor working practices among some suppliers was brought to its attention. Oh my God. However, the scope of this audit extended beyond this narrow social responsibility issue into broader operational and financial management aspects. Okay. Most suppliers have been working with Smartware for more than 5 years. So I will read this, and then while I'm reading, you just identify any weaknesses or anything which you feel that doesn't sound right. Okay, so most suppliers have been working for more than 5 years. This has led to a rather complacent attitude from the buying department. Complacent means lazy. Okay, because most of the suppliers have been working with us for the last 5 years or more. We know them, it's familiarity concept. So now we are chill, we are lazy, we are complacent attitude, we are not vigilant. The buyers rarely contact the suppliers, which led to a culture of carelessness. Oh my God. So we've got a buying department or purchase department or a procurement department, and these buyers, they don't really contact the suppliers. So everything is running on auto. Wow. Supply contracts are awarded for a period between 3 and 5 years, with prices charged indexed to inflation. So when we give a contract to a supplier, that contract is for a minimum period of 3 years up to 5 years, and every year the prices, they are indexed to inflation. This means that prices rise annually by only a few percentage points, which is then built into Smartware's budgeting process. I see all these as weaknesses. I'm not impressed by this system. No effort is made by the buying department during a contract period to compare what prices the company is paying to its suppliers compared with the industry average or competition. Exactly, this is what exactly I had in mind, that we give a fixed long-term fixed price contract, and then we never visit, we are not in touch, we are lazy, we are complacent. How do I know that we are still buying at the most competitive prices? Move your assets, you dumbass. This is the actual job of the buying department, to make sure that continuously whatever prices we are buying, it is the most competitive in the market. Do you see weaknesses here? Very good. So let's identify weaknesses. At least 2 or 3 weaknesses will come out, right? Number 1, most suppliers are working for more than 5 years. I don't like this. We must be changing suppliers. Otherwise, long-term dealings makes everybody, lazy and careless. Complacent attitude. Rarely contact suppliers. Culture of carelessness. This is a big weakness. And then contracts are awarded for 5 years. It's a weakness. No effort to compare prices. There are 3 weaknesses, straight 3 weaknesses here. Number 1, this one is a first weakness. And no contact and laziness is second weakness. And then we do never compare the prices with the market. 3 weaknesses. I would like to see your questions now before we proceed. I want to see whether you are understanding the approach. Quotes should be taken from suppliers before every transaction. It's not practical actually, but maybe not every transaction, but every year, every 2 years. 5 years is too lengthy. What does complacent attitude means? I told you, lazy, relaxed, careless. Quotes should be taken from suppliers before the transaction. No, yeah, I addressed that. How can a long-term supplier contract be a weakness? Yes, a long-term supplier contract can be a weakness because you are bound on a long-term basis, and you really don't know, maybe some good deals, some new suppliers may come up and we willing to offer better rates, but we never try to stuck with suppliers on a long-term basis, because we will get relaxed, they will get more relaxed as suppliers because they've got a long-term contract. And especially this company which we are talking about, this company Smartware, their business model is low price. Okay, so their business model is that they want to sell the cheapest. So when a company has a low price strategy, then it has to make sure that their costs are always minimum. So how can you be complacent? So all this, so long term is not good. Yes, Sushmita, you're right. She's saying familiarity with suppliers will lead to less strictness. Absolutely, yes, taken for granted. Yes, you're right. What about supplier is using child labor? Yes, we will come to that. It's in the next paragraph, okay? We may get better prices from other suppliers. Absolutely. Very good. Okay. So at least two weaknesses are there, that there's a complacent attitude from our buying department. That's not at all acceptable. Correct? That's a weakness. They should, because if our buying department is complacent, they are not in regular contact to the suppliers. There's a culture of carelessness. What does it mean? This means that our prices may not be competitive. The quality might be bad. Any bad thing will go undetected. What do we do to fix it? That the buying department should be in a regular contact with all the suppliers. They should visit them regularly. They should audit them. The supplier should feel the pressure that the buying department is really monitoring them. Okay. Then the contracts are awarded for fixed period of 3 to 5 years. Wow. So if you're a company who wants to sell the cheapest, then you must have annual contracts. Every year you must open up tenders and you should go with suppliers who offer you the lowest prices. How will you make sure? How will you remain competitive if you just give long-term fixed price contracts? Then why the hell do I need buying department? Get out. Do you understand? This is the way I think as a finance director, that there's a responsibility which the buying department needs to do, and they're not doing it. And then they do not compare the prices regularly. They don't know what's happening in the market. It is a weakness. Okay, now let's move to next para. Let's see if you can find more weaknesses. The allegations, which allegations? There were some bad working practices. Huh? The allegations that have been made about poor working conditions in some suppliers have gone unchallenged. If the suppliers had been more effectively monitored, then the buying department would have identified a clear contravention of the terms and conditions contained within smartware supply contracts. It simply means that some suppliers were violating, they were into bad, poor working conditions like child labor and no health and safety. It seems that when we sign a contract with the suppliers, we do mention that they will not use child labor, or they will not go for poor working conditions, but these suppliers were not complying with our supply contracts. And why did we know? Because our suppliers, they were never monitored by the buying department, and because the buying department was lazy, they were never monitored. They never got to find out that these suppliers were using bad practices. They never used to visit. The buyer's primary motivation is always to keep costs down rather than monitoring the ethical practice. Yeah, so the buyers, they don't want to visit these suppliers because they want to curtail cost. But in penny wise, pound foolish. You wanted to save some traveling costs, but your suppliers are now doing bad practices. That has a bigger consequence. It's a reputational risk, it's a legal risk. Okay. So again, there's a weakness that the buyers should visit They do not monitor the suppliers. They do not monitor the working conditions. They do not monitor the contractual obligations, whether the supplier are fulfilling the contractual requirements or not. That's a weakness. Okay, what else? There is an expectation that any serious breach of supplier performance or unacceptable behavior would be reported to the senior management so that an appropriate response could be made. Right. So the board, they expect that if anything serious happens, it would be reported. However, the word serious is rather subjective, and it is entirely up to the buying department whether or not to escalate any matter. Aha. So this buying department, they never escalate or report any issue to the board. So the board thinks that everything is working fine because the word serious matter is subjective. The absence of a formalized regular reporting means that supply chain issues are only considered by the board when an exceptional event occurs. So there is no formal regular reporting, absence of a formalized, that's a big weakness. So normally, you know what happens in companies, all departments, they make a quarterly performance report. There's a dashboard. Okay, so in finance, I as a CFO, the board would like to see what the finance department did in the last 3 months. So there are certain things, specific things which I need to report, like number of complaints, number of payments, any bad debts, any regulatory, any financial reporting deadline. So anything specific to finance, the board, I need to fill and update the board on a quarterly basis. Similarly, all departments, they are supposed to provide a quarterly update to the board, especially focusing on problems and issues and exceptions, all those things. So here there is no concept of this. Because there is no concept of regular reporting to the board, then the buyers, they do not report anything, and hence the board assumes that everything is working fine. So it's a reporting weakness. You see the heading here, it says reporting weakness. So this exhibit is full of weaknesses. Okay, so are you supposed to identify 5 weaknesses? Talk a little bit about the impact or consequence of that weakness, why it is a weakness, and more importantly, you need to suggest solutions. So I think I have something like this. Let me increase the view. So this is a memo format which we will look at tomorrow, and then there's a table in weakness and improvement, weakness and improvement, weakness and improvement. So this is a short version. Okay, I'm just giving some bullet points, but in the exam you will explain these points. Just have a look at it. Most suppliers working with smartware for more than 5 years. Buyers rarely contact suppliers. Contracts awarded for a period of 3 to 5 years. So all these weaknesses along with suggestions. Okay, let me check some questions. Just a minute, guys. Let me fix something. Reputational risk, yes. No, reputational risk is a consequence, yes. No monitoring, yes. Invite for yearly tender, yes. Can you provide handouts? Yeah, it's in the WhatsApp group. Have you ever 5-year affiliation How can a 5-year affiliation be a weakness? I already answered this, Ali. Someone also asked this question, and I said that a 5-year affiliation means that you get friendly, you get familiar, you get less strict. So I would rather prefer that I change suppliers every time, and or I at least go on a yearly contract. Okay, if all the suppliers are there for more than 5 years and all of them have long-term contracts, it's not good. Okay, Ali? Okay. Right. So even if you look at September webinar, there we also did another question. So, and this one is another question. So I've demonstrated 2 questions on internal control weaknesses, and same again for risk management. We have done a proper question in September as well, and this time I did another question. So you've got so you can look at those questions to get more confidence and see whether you are able to handle that question. Okay. So you see, yesterday also in one we saw this financial projection. Here also there's a financial projection. Every paper you will see a financial projection. So okay guys, CFOs, you've got like 2 minutes. Identify 3 weaknesses or 3 issues from this projection. Time starts now. First question, is it a discounted cash flow? Yes, I can see it's a discounted cash flow because I can see net cash flow, I can see discount factor and net present value. Yes. Second question, key assumptions. Total investment comprises of initial capital, sales tax on purchase, recoverable through the tax authority. Recoverable, sales tax is recoverable. Installation, system testing, staff training, 5-year maintenance and support contract. This doesn't look good to me. Why is it in initial investment? Why is it in total investment? Why is it in year 1? The 5-year maintenance and support contract should be year wise. Okay, what else? Okay, looks good. Third question, tax implications. Yes, they have taken tax implications. Fourth thing, payback. Let's quickly calculate payback. So for payback, we use net cash flow before discount. So I would just quickly calculate payback. 12 and 12, 24 and 12, 36. It's like 3 years and 3 months. Okay. Why these numbers are same? 22, 22, 22, 2, 2, 2, 2, 2, 3, 3, 3, 3, 3. Why? So I would mention that all the assumptions needs to be revalidated. All the contributions needs to be they're all constant over the next 5 years, which seems unrealistic. Okay, we should do for a sensitivity analysis. Very good. Short and sweet, eh? Interest should not be taken. Oh, was there an interest? Ah, very good. Good point. Because the discount rate it covers the working capital cost. Okay, that's a technical one. Right. So let's move on. So now again, all organizations, they face risks. In order to control those risks, they implement internal controls, right? So now, how do we make sure, how does the board or the governance makes sure that the internal controls are working properly or not, right? Internal controls are very important because it protects us from the risks. But how do we make sure that these controls are working properly or not? So then comes the role of internal audit. So it is a job of internal audit to review the internal controls on a regular basis to make sure that everything is working, the controls are working fine, the employees are complying with all the controls, and the risks are under control. You see, if you remember the previous question we did on the internal control weakness of the buying department, all these weaknesses were identified by the internal audit report, you see. So it is the job of the internal audit to audit various departments and identify the weaknesses to the governance so that they can have it fixed. So let's move to internal audit. So what is an internal audit? Internal audit is an assurance function within the organization. Within the organization, that is why they are called internal. So there could be an external audit, but internal audit is an assurance function within the organization to ensure that governance process, risk management, and internal controls are working effectively. So they give assurance to the board, they give feedback to the board that everything is working fine. So they are the eyes and the ears, okay, of the board. What do? They review the risk management procedures, okay, because the risk management procedures, all those things are being properly. They review the internal control systems because risk management procedures are dependent on internal control systems. They review accounting controls and reporting. They look at financial reporting and all those things are accurate. They review operational efficiencies. Okay, they look for legal compliance. They make sure that the company is following all the legal regulatory requirements, and they also do special investigations like a fraud investigation or a supplier investigation or a complaint investigation. Okay, so very interesting function, internal audit. So can you tell me who they report to? Can anybody guess who does internal audit report to? Audit committee. Someone is saying the board. Oh, Baba, chief internal auditor. So chief internal auditor reports to who? Most of you are saying audit committee. Some of you are saying board of directors. Yes, theoretically it's board of directors, but because there is a specific committee called audit committee, so the internal audit function, they report to the audit committee, not to the chairman. Irfan, they report to the chairman of the audit committee because there's a specific committee, right? That's the purpose of an audit committee. Ryan is saying internal audit reports to the internal audit manager. Very good, Ryan. Very good. I'm impressed. And the internal audit manager reports to whom, sir? Please, examiner will commit suicide if he sees this kind of, this is not a boardroom level answer, right? Internal audit reports to the internal audit manager. Okay, if you say so. Okay, internal audit function or the internal audit director reports to the audit committee. Okay, and the audit committee reports to the board. You understand? Good. Now, should we have an internal audit function? You know, not every organization have an internal audit function. Some does and some doesn't. So how do a company decide whether they should have an internal audit function or not? Because obviously it is a assurance or an audit function. It means extra costs, right? And no revenues. It's like they're auditing all the existing departments. So it's a very subjective thing whether we should spend money or costs on these kind of thing. So what are the factors which organizations look at when they want to decide whether they should have an internal audit function or not? Think and give me three things, three factors. What are the factors based on which we decide whether the internal audit function should be there or not? Cost benefit analysis, very good. That's one of the factor. In staff numbers, okay, if you have a very high number of staff. The size of the organization, very good. High value business, okay. Level of corporate governance required, very nice. I'm impressed, guys, very good. Complexity, history, whether they are listed company or not, that's a good point. Moses. Moses is saying whether you are a listed company and not or not. Laws and regulations, good, Ali. History of bad control, very good. Industry regulations, very good. I think you are all of you are correct. So what are the factors? So if I'm starting a new company, I would look at these factors. Number one, the first thing I would see is whether there is any legal requirement or not. So for example, listed companies, it is a legal requirement to have, it's a mandatory to have an internal audit function in a listed company. The listing regulations, the corporate governance requirements, the corporate law. So the easiest thing to first decide, see is whether there's a legal requirement or not. If there is a legal requirement, then all of these doesn't really matter. Then you got to have a legal internal audit function. Okay, supposing there is no legal requirement, then you will try to look at the size of the organization, the complexity of the organization, the growth level of the organization. If the organization is huge, if it is complex, if it is growing like crazy, then the board would want an assurance function, right, to give them some confidence that the controls are working and all the departments are working properly. Then I would like to see the risk levels. If I'm into high risk businesses, then I want, as a board, I would want some assurance that everything is working. I would look at number of employees. If I have a lot of employees, that means I'm a big company. So when things gets bigger, then controls, as a director, I would want that somebody gives me assurance. Geographical dispersion. So if I have several locations, maybe in the same city, maybe in the same country, maybe in a lot of countries, like a multinational, because of geographical dispersion, it's difficult to control and check when companies are geographically dispersed. So then that's a strong case for having internal audit. They can visit those branches and countries. Centralized or decentralized. It's easier to control centralized operations, but if I have a decentralized, then it's difficult to monitor and control. Then I would require internal audit to visit and let me know what's happening. Quality of the systems and internal controls. So if I have a very strong system and strong internal controls, then maybe I don't need internal auditors. But if my controls are weak, and if you see the next one, there's a high frequency, a high history of breaches and frauds, which shows that my controls are weak, then in that case, I would definitely suggest internal audit function. And in the last, my friends, I would also look at cost benefit analysis. Okay. So what is this? Factors to decide whether an organization needs an internal audit. Okay. So now, where there are risks, we need to put in place internal controls. How do we make sure that the internal controls are working properly? We need to put in place internal audit who checks whether internal control is working properly or not. Now, how do we make sure that internal audit is working properly? How do we make sure that these buggers are working properly? Then there is an audit committee who monitors the performance of internal audit. So you see, there are a series of checks and balances just to protect yourself from risk. We have internal controls. To make sure internal controls are working properly, we have internal audit. To make sure that internal audit is working properly, we have audit committees. This is how you manage companies. This is the concept of corporate governance. Okay. So audit committee, the next topic, audit committee, what does it do? Audit committee is responsible to ensure that the auditors remain independent. As the name says, audit committee. So they are responsible for the auditors, be it internal auditor or be it external auditor. They have to make sure that the auditors remain independent and objective, and financial reporting is accurate and reliable. This is the core task or responsibility of audit committee. Auditors and financial reporting. All members are supposed to be NEDs. That's a very important requirement. All the members of the audit committee have to be non-executive. Executive director cannot be a member of audit committee, and at least one NED should have recent expertise in financial reporting and audit. Okay, so it cannot be that the audit committee has three members. One is a pilot, one is a chef, and one is a supermodel. No, no, no. This audit committee has to do some work, right? It's not a party committee. So at least one NED should have expertise in accounting, finance, and audit, right? What do they do? I already told you what they do. They are responsible for the accuracy of the financial statements, that the financial statements, they are correct, true, and fair. They are responsible to make sure that financial reporting or legal reporting is done on time. They monitor the internal audit function. You see, the internal audit, they report to the audit committee. So they make sure that the internal audit is independent. They are not biased. They are doing their job properly, and any weaknesses which is identified by internal auditors, audit committee makes sure that those weaknesses are properly discussed and addressed by the departments, all those things. After internal audit, they are also responsible for managing external auditors. Very, very important, especially for listed companies, right? Appointment of external auditors, their scope of work, their fees, making sure that the external auditors are independent, any issues identified during the audit, how to address them. Everything is part of audit committee's responsibility. And lastly, provide whistleblowing arrangements to prevent fraud and misreporting. So, you know, all organizations like listed companies, they're required to have whistleblowing arrangements. I'm sure you all know what is the meaning of whistleblowing, right? Do you know whistleblowing? If you don't know, then write no. If you know, you write yes. Do you know whistleblowing? Yes or no? Oh, yes, very good. Yes, so audit whistleblowing simply means that if an employee finds out that some fraud is happening or some bad or wrong thing is happening, he can call on that audit hotline, the whistleblowing line, and he can talk to an NED or any person, you know, appointed by NED, talk to in confidence, and then the audit committee will investigate. Okay. Right. So, so whistleblowing comes under the ambit of audit committee. What is the advantage of having a separate audit committee? Why can't the board look at all these things? Why do you need a separate committee? So the same reason why we have a risk committee. What are the advantage of risk committee? The same advantages are applicable for audit committee. Okay, because having a separate committee, be it audit committee, be it risk committee, be it remuneration committee, be it nominations committee, what are the advantages of having a audit committee? Same thing, it is more focused and specialized. They can spend more time. The board can focus more on strategic and business matters. Higher involvement of NEDs, because audit committee all members are NEDs, and because of that it adds confidence to shareholders. Right? Very good. So let's do a very small quick question on internal audit. So audit committee and internal audit has not yet been tested so far. Okay, that's why I need to use a P1 question just to give you an idea what kind of questions you might expect. So P1 December 14 called Loho Company question 4A. So it's P1 December 14 question 4A. Let's go down. Required. Construct the case for establishing an internal audit function at Loho Company, 10 marks. Construct the case for establishing an internal audit function at Loho Company. 10 marks, how many points? 10 marks, how many points? 5, huh? Very good. So I need to give 5 reasons why Loho Company should consider having a internal audit. Okay. After a period of expansion into several overseas markets and structural decentralization, oh my God, Loho Company was considering its internal audit and internal control needs. Although privately owned and therefore not subject to listing rules, Loho's auditors had often suggested that a formal internal audit function would be beneficial. So you understand the background. Loho is a privately owned. So by regulation, they do not require a mandatory internal audit, but their external auditors are suggesting that they must have. So now they want us to identify some cases, like some points based on which they should consider. So I saw this word, overseas market. This word, decentralization. Okay, let's move on. The launch of several products and rapid increase in exports had raised number of problems. Interesting. Rapid growth, rapid increase, and then number of problems. These included problems in meeting the order deadline, while a number of operational constraints have mean that some orders have been delivered to customers late. The increase in overseas business has also, according to Sonja, the financial director, increased the overall risk profile of the company. So because of all this overseas growth, it has increased the risk profile of the company. Okay, what else? Credit risk has risen substantially. Stress word, has had a range of risk associated with exporting and overseas market. So I think this is entire point is, high increase in the risk profile. Okay. In addition to a growth from 150 to 600 employees in its home country. Oh my God, that's crazy growth. Loho has also had recruited a further 200 people overseas in order to facilitate business. So a very huge growth in employees. 150, they jumped up to 600 plus a further 200 overseas employees. So employees going up, risks going up, growth, rapid growth, they are decentralized, overseas, like overseas, these are all keywords. What else? As part of her continuing, no, nothing important. So now, do you think this company needs an internal audit? Do you think there's a ground? Can you construct a case for establishing an internal audit in this company? I need 5 points. Very simple. If you remember this list, factors to consider, decide whether an organization needs. Is there a legal requirement? No, because it's a private company. Move on. Size, complexity, and growth. Yes, they are becoming bigger and complex. Risk levels are increasing. Yes. Number of employees are increasing. Yes. Geographical dispersion. Yes. Decentralized. Yes. High frequency of breaches and frauds. Yes, because now they are facing operational problems. My God. Questions? You understood, right? It's easy, okay? Very nice, guys. Very nice. It's actually easy, but don't, or the only thing is you guys, you panic in the paper. Last time there was a case study on a non-profit organization, and majority students, they just panicked. What the hell? Now, what difference does it make to me whether it's a profit organization or a non-profit organization? The governance is the same. The concepts are the same. Don't you think a non-profit organization? Najia said that she also panicked. Yes. Oh, everybody said they're panicked. Okay. But why did you panic? Every concept is same. Don't you think a non-profit will have a governance structure? So, okay, in a In a profit organization, there will be a board of directors, correct? In a non-profit, normally they are called trustees, board of trustees. In a profit organization, there will be shareholders who appoint a board of directors. In a non-profit, you don't call them shareholders, they are sponsors or donors, they appoint trustees. Only the terminologies are different. Don't you think a non-profit organizations, they make strategies? Don't you think a non-profit organization needs to survive? Don't you think they need revenues and to minimize costs? Don't you think they face risks? Every concept is the same. Okay, it's just different terminologies. So just just focus on the basic. Don't look at the cosmetics, don't look at the scenario. Your basic concept should be very clear. What is risk management? What is internal control? What is audit committee? How do you decide internal audit function? All this will apply on commercial organization as well as non-profit organizations. Okay, very nice, very nice. Zishan is saying, I did not panic, but still I did not pass the exam. Any advice? I can give you an advice if you take me out for dinner. Okay, Zishan? Right. So done with this topic. And how much time we have? 10, 12. Okay. We've got like 15 minutes approximately. Our last topic, and it's a very interesting and a different topic, is called financing structure. Okay, so these all companies, they want to grow, right? Every company, they want to grow, and sometimes they need funding, sometimes they need finances to funds to finance their plans. For example, a company wants to set up a huge factory, right? Because of some in anticipation of future revenues. But then initially it requires a lot of funds to construct the factory. So it has to arrange finances, right? So now there are two forms of financing or funding strategies. There are two options. One is called debt financing and one is called equity financing. Debt financing means that you take a loan. It can be in form of a long-term loan from a bank or a debentures or term finance certificates. It's a liability. It's a loan, which means that you have to pay installments as well as you have to pay interest or financing costs, and there has to be some collaterals which you have to give them as security, all those things, gearings and all those things. That's all debt financing. Equity financing means that instead of taking a loan, you increase your share capital. You add more people to more owners to the business, and they will bring in their capital. They will contribute their capital, and then you use those funds to finance your project. But then now, although you don't have a liability like a loan, but now you have more owners to the company. Your shareholding dilutes, your percentage holding goes down as more people become owner, your share of profit goes down. Okay, equity financing, it can be done through ordinary shares, preference shares, rights issues, IPOs. IPO stands for initial public offerings. Now, as a CFO, you will need to decide that for any major expansion or funding requirements, which option should we go for? Should we go for debt financing, or should we go for equity financing? Which one is better? Both of them, you cannot say which one is better. Okay, in SBL, nothing is better. Both of them are better, both of them are bad. It actually depends on the pros and cons, because there are pros and cons of both the options. And it all depends on the organization, which like pros and cons suits which organization. You understood? So factors to decide funding strategies or financing options. First of all, we need to know the purpose. Okay, then we need to know the amount we are talking about. Is it 100 rupees, $100? Is it $1 million? Is it $100 million? So the materiality or the amount will also have a implication. Duration of the requirement, for how long you need this amount for. Is it for 1 year? Do you need this amount for 2 years, 5 years, 10 years? The duration. Okay, that's an important. Now, equipped with this basic information, that what is the purpose of the requirement, or what is the amount of the requirement, and what is the duration of the requirement. Now we'll go into specifics. So for debt financing, we must know some pros and cons. It is a loan. Okay, it has high costs. Normally, you cannot get a loan at cheap price. You have to pay interest, and the banks, they do charge a lot of interest because they are taking a risks and they need to make some money. So debt financing generally has higher cost. And then it's fixed cost, that is the interest payable is not linked with the business profitability. So you took a loan for a factory hoping that you will make profits, but but the factory, if it is profitable or it is in a loss, the bank doesn't care. So even if your factory is not making a profit, you will still require to pay the financing cost. So that's why we say it's a fixed cost. The cost of financing is not linked with the performance of the project or the business. And then you require collaterals. Collaterals are like physical assets, which the bank will put a lien on your assets, so that in case you default, they will take over your assets. So if you don't have sufficient collaterals, the bank will not give you a loan just because you look nice, right? And then you also need to consider your current gearing levels, because debt financing directly affects, long-term financing directly affects your gearing. So if your gearing is already like 60% or 70%, no bank in the world will give you loan. Okay, so you need to look at current gearing levels. So these are all the challenges or issues or disadvantages of debt financing. But there's one advantage. Debt financing do not disturb the ownership or the shareholding pattern. You are the sole owner of the business. It doesn't affect the culture, your ownership, your grip over the business. There are no outsiders poking fingers in your decision. Equity financing, the good news is the cost is linked with profitability. So what is the cost of equity? The cost of equity is dividends, right? And we only pay dividends are paid when the company makes a profit. So the more the profit, the more the dividend we pay. If we make losses, the shareholders, they don't get dividends. So the cost financing of this mode is very variable. It is linked with the profit, unlike the debt financing where the cost is fixed. Okay, what else? But it dilutes the existing shareholding pattern. It will reduce your shareholding percentage, which means lower profits. Outside shareholders or institutional investors will now become your partners. They will sit on the board. You will have NEDs on the board. They will poke fingers. They will say, why are you driving expensive cars? You know, it is no more your own personal business. Now you have outsiders asking questions about everything. And it may affect the culture or strategies of the company. So, you know, because they are outsiders, they are now the co-owners. They might challenge your strategies. They might challenge your style of managing business. They might challenge the existing culture. You may not like it. Right. Do I have any questions on funding strategies or financing structures? How do we decide whether we go for this or this? So we need to know the pros and cons of both the options. Do I have any questions? Debt financing reduces tax? Yeah, I think yes, but it reduces profits as well, right? Because it's an expense. Are we going to do any exam questions on that or not? Sabir, on that means what? That? Which that? You mean financing structure? Sir, are we going to do any exam question? Okay. How many the question be asked? How may be the question asked in the exam? I will just show you an exam question. Yes, Sabir, absolutely. We will do a question right now from SBL, though this has been tested once. Okay. So now we've got like 10 minutes. Let's quickly do SBL specimen paper 3 called NEBI, question number 2B. NEBI, question number 2B. NEBI, SBL specimen 3, question number 2B. Yeah. B. Consideration of the key fact. Prepare briefing notes for the board of NEBI on the following. B. Consideration of the key factors which will influence the financing structure the board of NEBI company might choose. 8 marks. Professional skills marks are available for demonstrating commercial acumen in using judgment and showing insight in clarifying the key factors and their implications for the board. Okay. So considerations of the key factors which will influence the financing structure. So let me explain to you. Though this is a company called NEBI, okay, and they have some future plans. They have two options, option 1 and option 2 for future strategic plans. Option 1 is to open one more restaurant. So NEBI is basically a chain of restaurants. They already have 8 restaurants and now they want to add a 9th restaurant. Okay, that's their usual business. And option 2, they want to open a hotel, like hotels with rooms, not the restaurant, but hotels with proper hotel with rooms, and that too in another city. It's kind of a diversification. So these are the two options. and then the board eventually agreed for this option. The board eventually agreed for this option that okay, fine, we'll go and open a hotel in another city. And now they have two options. Either they take a debt or a loan to finance this acquisition, because they plan to acquire, not open, but acquire a hotel. Okay, that's one option, that they will obtain a debt or loan to finance this acquisition, or they sign up with a venture capitalist. You remember venture capitalist we did on day one? So venture capitalists, they will inject capital. Okay, so this is kind of equity financing option. And now the requirement says consideration of the key factors which will influence the financing structure of the board of NABI company might choose. So first of all, what things we need to look at? We need to look at the purpose. We need to look at the amount. We need to look at whether we need long term, medium term, long term, and then we will talk about some pros and cons of debt financing and pros and cons of equity financing. So let me take you to one exhibit in which there's a financial projection. This one. So this exhibit tells you there are two options. Either they can open a restaurant or they open a hotel. And then for restaurant, they have given you the discounted cash flow, and for hotel also. So this one pertains to restaurant and this one pertains to hotel. Okay, now can anybody tell me how much funds is required in hotel business? How much initial capital is required? What is the amount required if we go for hotel? And how much is required if you open a restaurant? And is there a significant difference in the amount required between the two options? Yes. So if we just open a routine restaurant, we would require $5 million. But if we go for the second option of acquiring a hotel, then we require 21 million, which is like 4 times. So that's the first observation you will see. You will say the purpose and amount. You will say that, you know, in the case NABI will require 21 million as initial investment to finance to the acquisition of the hotel. This amount is significantly higher as compared to the opening up a restaurant, which requires $5 million only. And you think it should be a short term or a long term thing? This 21 million, you require short term or long term? So the projections are for how many years? 7 years, right? So I think this kind of thing is always long term, like 5 years, 10 years, 15 years, because they will make profit from the project and then they will start paying the installments, right? So we will say the requirement is definitely a long-term requirement. Okay. Now, should we take a debt of 21 million, or should we sign up with the venture capitalist who will give us 21 million, but then in return of that amount, he will take a substantial holding in our company? Which one would you go for? Think. Which one would you go for? Should we go for debt? If you are the CFO, would you go for debt financing or would you go for equity financing? Acha, right now they are a private limited family owned business. Family owned business means that they are owned by one family. So there's never been an outsider on the board. They have always been managing the way they wanted to manage. It's their own company, own culture, own style, lavish style. Whereas a venture capitalist doesn't like all this. Okay. So let me go. Debt financing, it will be high cost and the financing cost will not be linked to the whether we make profit from the hotel or not. But then we also need to see whether this company NABI has sufficient collaterals available. We need to look at current gearing level of NABI. We need to tell the board that okay, also if in case we decide for debt financing, we also need to see the current gearing level, because if it is already high, then we will not be able to get finances. But the good thing is it will not disturb the shareholding pattern. It's a family business, it's a closed business, it's good. However, if we go for equity financing, there will be definitely some advantage because the cost of equity financing will be linked with the profitability of the project. But we will have to give up partial ownership. It's a family owned business, our own strategies. Now a venture capitalist will have some NEDs on the board. He will challenge, he will question our strategies, he will question our style, our culture. Are we willing, are we mentally prepared to, having that kind of interference? So do you understand the approach? Okay. Now in the question, already in exhibit, one of the exhibits, these things are mentioned. So as I said, we need to link with the case. So you can you read this paragraph? Wait. Can you guys read this paragraph? This one. This contains all the information which we need in the answer. We will say of this. Now this is a comment from John Nebby, who is the finance and IT director. He says a venture capitalist will be committed to our success in a way the bank is not. Why? Because a venture capitalist is a shareholder. He will be committed to our success. Bank is not a shareholder. A bank will get the same amount of interest on our loans regardless of how well we are doing. The current terms with our bank stipulate that our gearing does not reach 45% and that we remain solvent. So you see, the current their gearing, if their gearing is less than 45%, then only they can consider bank loan. Otherwise, they will not even get it. So these are the things you can write under debt financing. You will say that the bank will, its cost is fixed and the current gearing stipulates of 45%, linking with the case. On the other hand, a venture capitalist return, on the other hand, grows in proportion to how successful we become. It means that it will grow like in dividends. If we earn more profit, we give more dividends. So in signing away some measure of control in form of shares, we also gain a powerful ally to help realize our plans. We do not have the appetite or capacity as a family to do this alone. So you can pick up these points and put in your answer and you are done. The question was 10 marks, I believe. Yeah, it was 10 marks. So it's good enough. Interesting. Did you find it easy or difficult? Okay, so Sharik is saying, what should be our decision? Sharik is asking, what should be our decision? I don't actually care what will be our decision. Why? Because if you read the question, are we supposed to give a decision or not? Are we supposed to give a decision or not? Where is it? Come on, man. Here. Prepare a briefing note for the board on NABI on the following. Consideration of the key factors which will influence the financing structure. So we just need to identify or flag the pros and cons of the key factors affecting the decision. We are not supposed to give our decision. Okay, this is what I meant when I said do not give recommendation or conclusion unless specifically asked. Okay, because it is up to the board to decide. It's not up to you. Your job is to identify the pros and cons so that the board can take a collective decision. Okay, so in case the question said also give a suggestion, then it's up to you. You can either give debt financing or you can either give equity financing. Doesn't really matter. There is no one right answer. But whatever recommendation you give, make sure you give a strong justification to support your recommendation. Okay, as long as your logic is correct, you will get full marks. Right. Please, what format should we apply in the brief? I will show you all the formats tomorrow. Don't worry. Please, can you comment on commercial acumen? I will do that tomorrow. But there is nothing actually you done in commercial acumen. You just talk business. You talk in business sense. Commercial acumen means that you have a commercial mind. You talk business sense. So when we talk about this equity financing, debt financing, it will affect our shareholding, it will affect our culture and this and that. It's common sense business talk, right? You will get full commercial marks. Yes, Irfan, very good. You are saying talking in business language. That's commercial acumen. Right, guys. So I think today we did some important topics, especially the risk management and internal controls. Every attempt there is a question from these topics. Okay. Very nice. So now let's end tonight's session. And those of you, where is it? Those of you who are not part of my WhatsApp group, or you can just message me here and I will add you to my group. Tomorrow is the last day of our webinar. I seriously don't know how time flies. It's like we are almost, feels like yesterday we started and now tomorrow is the last class. So tomorrow's focus is a bit different. So the first 4 classes was all about topics, concepts, linking with the case, doing questions here and there. Tomorrow, I want to focus on all the various formats. Formats are easy marks. You give a format, you get marks, and formats are not difficult. I will show you all the formats tomorrow, and we will prepare formats. Okay, we will do 2-3 questions, even more questions. Then we will make the formats, briefing paper, notes, presentation slides. After that, I will focus on professional skills. Okay, how to get maximum professional skills. Not difficult. It's not difficult. So just leave it with me. Okay, so tomorrow, guys, I will see you all, and till then, you guys take care and good night.